In the rapidly evolving landscape, where artificial intelligence and blockchain technology converge, few projects have captured the imagination of both technologists and investors quite like Bittensor, also known as TAO. The narrative of Bittensor is not merely about a new cryptocurrency. It is a profound story about the ambitious endeavor to transform machine intelligence itself into a tradable, standardized commodity within a decentralized, permissionless network. This project stands at a critical intersection, nexus point between the AI revolution and the crypto economy, drawing significant attention and capital from discerning participants across both domains. To truly understand its potential and the underlying investment thesis, we must dissect its origins, its intricate operational mechanics, and the economic forces that are shaping its trajectory. The journey of Bittensor is a case study in creating a new digital commodity market from the ground up, one where the product is intelligence itself. The genesis of Bittensor can be traced back to 2021, a period marked by an exponential surge in AI capabilities and a growing discourse on the centralization of this powerful technology within a few large corporations. It was within this context that the Opentensor Foundation, spearheaded by founders Jacob Steeves and Shaabana, introduced a radical new vision. Their proposal was to create a peer-to-peer marketplace for AI services, built upon a dedicated Layer 1 blockchain. This innovative structure was designed to decentralize access to and development of machine intelligence, effectively creating an open market where anyone could contribute and consume AI models. The core operational model of Bittensor is elegant in its complexity. Functioning as a decentralized network where a vast array of machine learning models are continuously shared, collaboratively trained, and, most importantly, ranked based on the value they provide. This creates a competitive meritocratic ecosystem for artificial intelligence. At the heart of Bittensor's network are three fundamental components, each playing a distinct yet interdependent role. First, we have the miners. In this ecosystem, miners are not solving cryptographic puzzles in the traditional sense. Instead, they are the producers of intelligence. They contribute their computational power and proprietary AI models to the network, competing to provide the most accurate and valuable outputs in response to queries. Second are the validators. These participants act as the quality, control, and capital allocation layer of the network. They send inference requests, or queries, to the miners and are tasked with meticulously evaluating the quality of the outputs they receive. Based on their accurate assessments, they rank the miners and, in turn, earn a V-Trust score and a share of the network's TAO rewards. This incentivizes validators to be honest and effective arbiters of quality. Finally, we have the users, the end consumers of the intelligence market. They submit their inference requests to the network and, through the validation process, receive the highest quality, most relevant results sourced from the competitive pool of miners. Underpinning this entire tripartite structure is Bittensor's bespoke consensus mechanism known as UMA consensus. This innovative mechanism represents a sophisticated hybrid approach, combining elements of proof-of-stake PAs and a unique form of proof-of-work POW, which can be more accurately described as proof-of-model or proof-of-intelligence. Validators participate through a PA's model, where they stake TAO tokens to gain the right to validate network activity. Miners, on the other hand, participate through a POW-like model, where their work is the valuable computational inference they provide. This dual-sided incentive system is crucial. It economically aligns the interests of both miners and validators, compelling them to maintain the highest standards of quality and integrity to maximize their respective TAO rewards. This mechanism is the engine that drives the perpetual optimization of the network's collective intelligence, ensuring a constant drive towards better performance and greater value. The economic design of Bittensor, particularly its tokenomics, reveals a deep and deliberate inspiration drawn from the most successful decentralized asset to date, Bitcoin. The maximum total supply of the TAO token is hard-capped at 21 million. Mirroring Bitcoin's fixed scarcity, this immediately establishes TAO as a potentially deflationary asset designed to appreciate in value as network demand grows against a finite supply. Furthermore, Bittensor has implemented a halving schedule where the rate of new token issuance is cut in half, approximately every 4 years. This programmatic reduction in supply inflation is a powerful economic lever designed to increase the asset's scarcity over time, rewarding long-term holders and network participants. In a significant departure from the venture capital-driven model that dominates the crypto landscape, Bittensor was introduced through a fair launch. There was no initial coin offering ICO, no pre-sale to venture capitalists, and no pre-mined allocation for the founding team or advisors. This approach was a clear signal of the project's philosophy, prioritizing grassroots community participation and decentralized ownership from its very inception. A pivotal moment in Bittensor's evolution arrived in October 2023 with the Revolution update, which introduced the concept of subnets. This was a critical architectural upgrade that transformed the network from a monolithic system into a modular, multifaceted ecosystem. Subnets are essentially independent, specialized subnetworks operating within the broader Bittensor framework, each designed to incentivize a specific niche AI task. For example, one subnet might focus exclusively on advanced text generation, another on natural language processing, a third on image inference, and so on. This specialization allows for a more focused and efficient allocation of resources, enabling the development of highly sophisticated purpose-built AI services. Today, there are over 32 active subnets, each fostering its own competitive market for a particular type of intelligence. Overseeing this entire system is the root network, which acts as a master validator, evaluating the performance and value contribution of each individual subnet and allocating the overall DAO rewards among them based on their perceived importance to the ecosystem. The period from early 2024 to the present has been characterized by a spectacular growth phase for Bittensor. Coupled with emerging pricing challenges inherent to such a novel market, propelled by the broader tailwinds of the AI narrative that has captivated global markets and bolstered by implicit endorsements from major institutions like Grayscale, which included DAO in its analysis of potential new investment products, the token experienced a meteoric price appreciation. At its peak, DAO recorded an astonishing increase of over 1,500% in 2023 alone, reflecting a surge in investor confidence and a growing recognition of its unique value proposition. This growth is further compounded by the principle of forced scarcity. The network is steadily approaching its first halving event. It's projected to occur around December 2025. This event will see the daily token issuance rate slashed by 50% from the current 7,200 TAO per day down to 3,600 TAO per day, dramatically tightening the new supply and potentially exerting significant upward pressure on its market price. However, this rapid ascent is not without its challenges. One of the primary hurdles the project faces is one of pricing and valuation. As a first-of-its-kind decentralized AI market, there are no established standardized benchmarks for comparing the value of different AI models or services. This lack of a clear valuation framework can lead to price volatility and difficulty in assessing the fundamental value of the network's outputs. Additionally, some critiques have been leveled at the reward allocation mechanism, with concerns about a potential for slight centralization. As a small number of validators can wield significant influence over reward distribution, another practical concern is the high cost of entry for new miners, which could potentially create barriers to participation and stifle competition over the long term. Despite these hurdles, the ecosystem continues to mature, attracting sophisticated institutional capital. We are witnessing strong participation through new, innovative financial structures like TAO, which allows for direct staking on the performance of specific subnets. Prominent digital asset funds, such as Yuma Asset Management and Stillcore Capital, are now active participants, signaling a new phase of institutional adoption and financialization of the Bittensor network. In conclusion, Bittensor represents a pioneering and audacious experiment in market creation. It is a project that is not simply building another application on a blockchain, but is attempting to forge an entirely new, open, and decentralized digital commodity market from first principles. The commodity in this market is artificial intelligence itself, a resource that is transparently competed for, objectively valued, and fairly rewarded. While the path ahead is fraught with the inherent challenges of building such a novel and complex system, the architectural ingenuity, sound economic principles, and the growing ecosystem of developers, miners, and investors position Bittensor as one of the most significant and closely watched projects at the frontier of the digital economy. For investors with an appetite for paradigm-shifting technology, TAO presents a compelling, albeit high-risk, thesis on the future commodification and decentralization of intelligence.